Good morning, everyone. My name is Sabrina Lowery, and I am the qualifying broker of Legacy Realty and Management. And today we would like to welcome you to the ultimate home buyer experience. And what that means is you will be learning all about the tools, the resources, how to get funding, etc., on becoming a homeowner. Today, we do have some guests in the Zoom room. We are also live streaming this broadcast to YouTube. So, for anyone that is on the YouTube and you want to jump on over into the Zoom, please feel free to do so. And I will give you that URL. It is bit.ly/home buyer experience. All right. So I'm going to type that in the chat, bit.ly/home buyer experience. And that's going to be all lowercase. It is case sensitive. And once you register, it'll bring you right on here into the Zoom room. So let's get started because today we are absolutely focusing on home ownership. So I want to make sure, let's go ahead and get my IG rolling as well so that video can save. Give me just one moment, everyone, because we are multicasting a stream and I want to make sure that everyone that wanted to get this information can get the information. Just a moment. There we go. All right, y'all. Thank you for your patience. And we are going to start this live broadcast. Okay. So let's go the home buyer experience. All right, here we go. I thank you again for your patience. We want to make sure that all of those that wanted this information have access to it, whether you are here live today or you're catching the replay. That's why we do it. It is for you, okay? There we go. Perfect. Fantastic. So let's move on. The facts about home ownership. Let's talk about that. When we're talking about home ownership, I come from a family of homeowners, originally born and raised in Elizabeth, New Jersey. My grandmother and her parents, my great grandparents, were homeowners. On my father's side of the family, my grandfather was a homeowner. And so when you talk about the history and the richness of achieving the American dream, I think it's very important to really look back on our roots and how we were raised and how the foundation of where we grew up looked like and what that felt like. Did your parents talk about mortgage? Did they talk about finances? Did they talk about credit? Those are questions that I absolutely know I heard around my household. I also watched my grandmother and my aunties, who were all homeowners, go around and collect rent money. So let's think about that and talk about that. What is that? That means they were into the real estate investing business at the same time they owned their home. And here's the smart part about that. You get to collect rent on the property you're living in, which basically means you are living mortgage free because the tenant's rent payment to you is covering your mortgage payment. So these are some strategies that I learned very early. I became a homeowner before I was 30 years old because I knew the richness and the benefits of home ownership. Good morning, everyone. Thank you so much for jumping on. So let's talk about this because it's important to know the facts. And then you don't feel like you're in this boat alone to actually become a home buyer. So let's think about this. The US home ownership rate currently is approximately 64% across the board, 64%. And so the average first time home buyer is about 33 years old. Didn't I tell y'all I got my first house right by the age of 30? Good morning. Thank you for jumping in, everyone. Hello, Chris. That's my next home buyer right there, my baby boy. Good morning, my sunshine. I love you. So let's talk about this. The front end millennial generation. How many of y'all are millennials today? Let's talk about that. If you are a millennial, there are statistics saying that more than half of your population is ready for home ownership because you're ready to fire your landlord. You're tired of your rent payments going up every single year, right? And so let's talk about that. So the highest home ownership rate is among, can you believe this? The boomers. The baby boomers. Do we have any baby boomers on the call today? Because what's happening is that age group who is in their 60s, these individuals probably owned a home before in their lifetime. So they understand the process of home ownership. And when I talk about home ownership, y'all, I'm not just talking about first-time home buyers. Because if you think about the boomers, some of these people have owned their home for over 30 and 40 years. Like literally, I watched Emmett Smith on the Celebrity Makeover show recently, who built or rebuilt, I should say, renovated his father's home down in Pensacola, Florida. And y'all, do you know how amazing it was when Emmett told the story about how his father and his grandfather laid every brick for the foundation of that home? And here we are in 2021, and an entire interior makeover is happening. These are the benefits of home ownership. Generationally speaking, who gets the benefit? 3 generations: the grandfather, the father, and the son. And now the son's children. So listen, I am preaching about home ownership because I believe in the power of investing in the American dream. I've watched my own home, pandemic and pre-pandemic, increase value. Can you believe that? You're like, how in the world in a pandemic does your asset increase, get equity? That means value, y'all, right? That's what I'm talking about, that you don't know these things, you can't do better. When you know better, you do better. So you said your daughter is 27 and just bought her first home, a 4-bedroom, and it's beautiful. She gets it from her mama. Okay, I love it, Juice Plus T. Thank you for sharing, Ward Kev. You are a homeowner and grateful for it. So this is the feedback I'm getting here today. Those of us that have taken the journey, listen, nobody said the process was easy. I just said there were benefits, okay? There's pros and sometimes cons to every process. But here we are today to dispel any myths, answer any questions, and ensure that you have the information that you need to get started. Now, because I'm speaking to my family globally, not everyone is in Georgia. So let me tell y'all a few facts where the highest home ownership rates are. West Virginia, go figure. That's where my mama's side of the family is from. And so West Virginia is among the highest rated home ownership state. Next, we have New Hampshire. If you're from New Hampshire, drop it in the chat. If you are from Delaware, Delaware has a very high home ownership rate. And last but certainly not least, which does not surprise me, is the state of Maine. Everybody understand, right? Maine New Hampshire, Delaware, Michigan, I forgot to mention, and West Virginia, 70% or higher of their population are homeowners. If you find those facts to be fiction, challenge me in the chat. Okay, let's talk about how every state does have at least a 50% home ownership rate. Now, while I may not get the fuzzies and the warm and fuzzies about that statistic, I kind of am happy to know that at least half of y'all, half of your families actually believe in the investment of home ownership, because those that know better do better. Those that have been in homes where there's homeowners before them tend to become homeowners. And those that are forever tenants, listen, don't knock no one's hustle, but being a tenant is basically making a landlord wealthy. That does not give you the ability in your estate planning to leave any kind of real estate asset to your estate. Does everyone understand that? Okay. So we've got my son is 11 and we visit new properties often. He is now learning the building process and said, Mom, I'm going to be just like you when I buy my first home on a corner lot. Speak it into existence, y'all. You know, I like when the babies speak life because they are the truth tellers. So that is fantastic, Juice Plus Tea. And you said, what's the rate in the state of Virginia, Kev? Listen, I've only got a few statistics and it didn't fall into the highest ratest, but let's just say it's over 50%. Okay. So thank you for asking those questions. We are live and we have some folks in the Zoom room. Again, if you want to jump in the Zoom room, please go to bit.ly/home buyer experience and you can join us right now. We are live and you can pose your questions privately once the live stream is concluded. Okay, so let's think about that. Next, the housing sector directly accounts for approximately 14% of the total economic activity. So you talk about pandemic proofing, having some resources, some assets, some equity somewhere, something that you could pull some liquid cash from. This is one other benefit to home ownership. I'm just sharing the facts with y'all because the benefits of home ownership are real. And how is it that I could help create the ultimate home buyer experience for you and your family if you don't understand what you're getting into? You know, it's almost like a try before you buy. We want to understand what it is that we're doing and also understand how do we get to the finish line. In this case, it's to the closing table. We want to get to the closing table. So here's a benefit. Home ownership is the American value, and it is the cornerstone of our economy, as I just said. Right now, President Biden's administration is working on these rental eviction moratoriums. How many of y'all know what I'm talking about, right? And if in the state that you are in, your local laws are superseding what the president's laws are saying and doing, I'll give you a perfect example here. In the state of Georgia, DeKalb County said, "Thou shalt not evict a tenant in our county. Don't come to the superior or magistrate court to look for eviction filings because we're still enforcing the moratorium." And so if your family happens to be facing eviction, if you are a humble person that needs assistance and doesn't mind asking for help, I have an entire resource of information with rental resources, y'all, that I want to give you, and it only requires you asking. There are over 6 different organizations here that talk about housing providers Meaning, if your landlord is going to evict you, don't go homeless. Let's look at some housing providers. Okay. There are some also rental assistance programs that you must qualify for. So, again, if you want or need this information, it is available for free. I'm happy to provide the link to these resources, and just go on sabrinalowery.com/shop. Thank you so much, Juice Plus Tea, for joining. Have a great day. All right. So, responsible home ownership is the key to building wealth and a strong middle class. Okay. So let's dispel that myth. The home ownership is not for the wealth class. It's not for the wealthy, the rich, and the famous. It is absolutely attainable and achievable for the average consumer, meaning a family whose household income might just be below $30,000 a year. And you're thinking, well, how in the world can someone making less than $30,000 a year get a home? Well, ladies and gentlemen, there's a budget for everyone, right? There is homes for everyone. I have people that call me for rentals as low as $600 a month, but then I also have renters that are paying well over $3,800 per month for their housing as a renter. And you're thinking, but why do that? Who does that? It's because we all need housing, and everyone has a housing lifestyle. So when you have your housing lifestyle, you never, ever, ever want to be what we call in the industry house poor. We don't want that, okay? Nobody wants to be house poor. And that basically means that your budget for your housing, by the time you paid your rent and your utilities, we're not talking about gas and food, because those are your living expenses. I'm talking about your housing expenses, right? Those of y'all that are subscribing to your Netflix and your cable and whatever else, your security alarm system, your renter's insurance, all of that in your housing budget should never exceed a third of your monthly income. So do the math. If your monthly income is $1,000, you shall not pay rent more than $333 a month. So y'all double that on $2,000 a month and triple that on $3,000. And then you do the math and you figure your housing budget. Because in the next segment that we're going to have in this workshop today, we're going to break it all the way down about the financing and the funding. Okay. So any questions so far, y'all drop it in the chat. If you are enjoying what you are hearing and learning something new, then you just let me know. If you are thinking, hey, Sabrina, I need a copy of those rental resources, just put a comment, rental resources, and I will get back with you. Or if you need to book an individual consultation to speak to me independently about your journey into home ownership, just go to sabrinalowery.com and click book a call. It's right on the home page. So the last statistic that I wanted to share with you is about the fact that home ownership does offer tremendous freedom. It offers you the ability to create a living environment that you always wanted, not at the landlord's discretion, right? So sometimes you want to paint a room, you want to plant a garden like I do every year faithfully. You have flowers that you want to see to add curb appeal to your home, but the landlord is not in favor of those things. And then it's like, well, why would I beautify a property that's not mine and put money into the landscaping and the maintenance? It's because that's your lifestyle. I don't care if you're a renter or a homeowner. It is still an expense that you have to put into the budget and factor all of these benefits over the cons. All right, y'all. So let's go ahead and shift gears. I want to make sure that everyone knows how to get the money to become a homeowner. And this is the crucial part of the presentation. Again, everyone can go to sabrinalowery.com /shop. And once you go there, you will have the ability to get your digital downloads for the Ultimate Home Buyer Guidebook, okay? And the Ultimate Home Buyer Guidebook is over 70 pages of resources, information, step by step information about how you can get the keys to your dream home. And I'm thrilled to share that with you. All right, so let's go ahead and segue. Let me get this video queued up. Just one moment. Here we go. And for those of y'all that are on IG, I want to just give y'all the opportunity. Go on over to my YouTube page because we are streaming live. And if you prefer to get the digital replay, then you'll just stay tuned on YouTube. And that is youtube.com/Sabrina Lowery, RE Tech. Y'all make it a great day. Thanks for tuning in. All right, so for my live streamers here we go. Screen one, where are you? There we go. Greetings, everyone. Thank you so much for being here for the ultimate home buyer experience. So our next segment is going to feature all of your financial questions from one of Atlanta's top leading mortgage experts, none other than Miss Tanya Blanchard with Madison Chase Capital, who I have known, ladies and gentlemen, for nearly 2 decades in the industry, leading the pathway on the financing side for home ownership. Not only has she been in the industry long enough to see the market crash and recover, but help homeowners with refinances and their first home purchase. I would like to welcome to the virtual stage, ladies and gentlemen, Miss Tanya Blanchard, whose voice you will hear, and we will also have Q&A at the end of the segment. So just save your questions, drop them in the chat so that along the way we can answer your questions. Tanya, the mic is yours.
Thank you so much, Sabrina, for having me on today. I'm super excited to share with everyone some tips and information to purchase a home. So one of the first things that I always tell people, when you're getting ready to purchase a home, it doesn't need to be an impulse experience. It needs to really be something that you plan for. I would say 1 year, if you're in a lease, I would say start planning a year beforehand. One thing that you want to do is you want to look at your credit, and I want you to stay away from Credit Karma. Stay away, stay away, stay away. Credit Karma is good for knowing what's on your credit report. It's good if you find out if you have a collection. It is not good to tell you what your credit score is. So I'm jumping right in with credit because you can have income, you can have down payment, you can have all those things, but without and then you have VA and USDA 100%. USDA just depending on the geographical area where the home is. So with that being said, I want you to look at MyFICO, MyFICO.com for your credit report. You want you want mortgage score number 2. So you'll see about 8 different credit scores on MyFICO. Now, MyFICO is not free. It is $30. And then you can cancel. There is no free trial. But what I really like about My FICO is that if you go to myfico.com and you look at mortgage score number 2, that is going to be the credit score that I use. So I think it's just critical to arm yourself with accurate information. I had a client today who said her score dropped, 80 points, blah, blah, blah. And she told me she was in the 700s, and I immediately knew, because her report was a 608, and I knew immediately that she was on Credit Karma. So it's just important. I don't want you to be disappointed. That's why I'm telling you to go to myfico.com, just to get a good idea. Once you look at that, like I said, FHA 580, conventional, they say 620. You really want a 680 credit score for conventional mortgages. So first thing you do is take a look at your credit. Now then you've got income. I want to just tell everyone out there, if you are an entrepreneur and you feel like, ooh, I'm ready to start my own business, get your house first. And that is crucial, because when you start your own business, I have to use 2 years of tax returns, and I don't have 2 years of tax returns. Opposed to if you purchase your home while you are employed, I just need your W-2s and your pay stubs. So if you're a W-2 employee, I just need your W-2s and your pay stubs. What I'm going to do is I'm going to take your credit, which I have to pull. I'm going to take your income. I'm going to calculate everything, and then we're going to get your debt to income ratio. Good news for FHA or conventional. Guidelines were recently changed, so student loans don't have to count so heavily against your debt to income ratio now with FHA. If your loan is in deferment, I do need to know what that income-based repayment is. So let's just do a quick recap. The first thing we want to do is just check out credit. And if you've always paid your bills on time, your credit's pretty solid, you can just give me a call right away. But this is us being prepared. So a year before, you want to go to My FICO. Then you want to look at your income. Then last but I think that that's critical. One thing that I would really suggest is go ahead and start saving now. Put your money at an account that you don't have access to, and just systematically, if you want to save $6,000 for your house, for your down payment, then you need to save $500 a month. Just do it systematically, twice a month when you get paid, or every week. Go ahead and pay it so you can start saving. I think that that is key, just to be prepared. There are down payment assistance programs out there, but you really have to be careful. A lot of the rates are totally inflated. The rates right now, FHA, are anywhere from 2.5% to 3%, depending on credit score. Right now, for let's say Chenoa, you're at 4.25% to 4.5%. That doesn't sound like a lot, but believe it or not, 2.75 and 4.25 is $67,000 worth of interest over the life of the loan. I know you're not going to be in your house most likely for 30 years, but that's a good barometer for you to really see interest rate does matter. 2.75 to 4.25, that's $67,000 extra in interest that you're paying, opposed to just go ahead and saving your down payment, working with the realtor. The market is really, really tough right now for the seller to pay closing costs. So I would recommend that you talk to a lender. FHA, it's a lot easier to give credit for closing costs, just the way pricing is, opposed to conventional. But I would first start with seeing if your lender can offer any lender credit to help with closing costs. Because you're going to have your down payment, which is 3.5% or 3% of the sales price minimum. And then you are also going to have your closing costs. So you've got closing costs and prepaids. And so a lot of times everybody lumps them together, but they are not the same. Closing costs are costs associated with your loan. So if you're any origination fee, processing fee, underwriting, then you've got your attorney fees, or if you're in Florida, the title company fees, depending on where you're located. You've got your title company fees, then you also have your state fees. So in Georgia, it's intangible tax, it's transfer tax. You have that. So those are your closing costs. And then you have prepaid. So I always tell people, think of things, prepaids are things that you pay for in advance. So you're going to pay for your days of interest. You're also going to pay for your homeowner's insurance premium has to be paid in full at time of closing. So if your annual premium is $1,100 is going to be collected at closing. So once again, you're prepaying it. And then lastly, the last piece of the prepaids are the funds for your escrow account for taxes and insurance. So you got your closing costs and you got your prepaids. And so on a whole, FHA, the seller can pay up to 6% of the sales price and closing costs. Conventional, if you're putting 10% down or less, then the seller can only pay 3% of the sales price and closing costs. So once again, easy math. If it was conventional, your sales price was $2,000, then it's $6,000 the seller can pay in closing costs. FHA, the seller would be able to pay $12,000 in closing costs, but obviously you wouldn't need that much. I'm just giving you that example to show you the difference between how much the seller can pay for conventional and FHA. So let's do a quick recap. We're going to look at my FICO, then we're going to get your income docs. Then we talked about down payment. Next, you want to talk to somebody about what that monthly payment is. I don't qualify people based on how much house they can afford. I qualify them on their comfort zone for their monthly payment. And that's critical. Sometimes you can be approved for a house of $400,000, but that mortgage payment might not fit your budget. So what you want to do is when you're talking about getting pre-approved for a loan, you want to focus more on this is where I want my monthly payment to be. A lot of times people, I have a girl, I know this number in my head because at 2.75 on a $275,000 house with 3.5% down, I want to say principal and interest was 1151 or 1156, and she wanted her payment at $1,300. Well, right there, that's mathematically impossible because you've got to include taxes, insurance, and mortgage insurance. So I am a firm believer God is a miracle worker, but 1 + 1 still equals 2. So you have to be very realistic with that house price, what that payment is and what it will be. I think that is really crucial. So we'll go over down payment. We'll talk about what your monthly payment is. We'll talk about what your down payment is. I'll let you know how much closing costs are. And then your pre-approval letter is issued once we get the income docs, just to verify that, you do make, $52,000 a year, you have X amount of dollars in the bank. But the biggest thing at the beginning really is going to be the income, believe it or not, your income and your assets. I do like to look at bank statements at the beginning. Believe it or not, you can be denied for NSFs. If you have more than one NSF, you could possibly be denied. It shows that you're not fiscally responsible. So I always just kind of like to peruse your bank statements up front just to see if we have any NSFs. I had a girl who had literally 30 NSFs. And I said, you have to get a new account. And she's like, I don't want to. We had to delay the closing and everything. If we had to turn that bank statement in, she would have been denied. Now, granted, she paid all the fees, so she wasn't, but why do you let your account get overdrawn 30 times, regardless if you're paying the fees or not? It just is, you're just not really responsible. So you want to watch that as well. So so then we need your bank statements. And then once you send us all your income docs, we go over all the numbers, we'll send out your approval letter, and your approval letter is good for 120 days. So that means if I ran your credit on, I'm making this date up, on August 1st, so September, October, November, December. So that means you really have to close by, it's really going to be like November 30th or 29th, just depending on how many days are in the month, but it's 120 calendar days your credit report is good for. And then you have 120 days to go look for your home. Anything else?
Awesome. Thank you so much, Tanya. I'm over here just taking notes and taking notes for the people because they're going to have questions. But that was super fantastic. Thank you so much, y'all. Virtual applause for Miss Tanya Blanchard. And here is my summary and my takeaway. And Tanya, you will then see why I was so diligently on pause when you were done speaking. So what I have just created for our attendees, I'm going to do a screen share. There we go. Can you see that on your screen?
Wow. Yes.
Wonderful.
Yes.
So what I heard Miss Tanya say, ladies and gentlemen, is that you are going to need a few items. So Tanya, I am going to just call out a few things. And as I read off this checklist, if I've missed anything, we're going to get this updated for the people together. How does that sound?
Sounds perfect.
Wonderful. So first and foremost, ladies and gentlemen, you should have heard Tanya speak to the point of your income and your employment verification as being part of this process. And so we're asking for 30 days of your most recent pay stubs. If you are self-employed, you see here the 1099 forms of the most recent 2 years would be required. So how about I go ahead and make that bold, and then in parentheses, I put self-employed, right? Or anyone that is contractor, right? Because some people do work on 1099. And then I heard Tanya speak about your tax returns, ladies and gentlemen. So that would put you at the current years needed, 2019 and 2020. Is that correct, Tanya?
That is correct. Now, I only need your tax returns if you are self-employed. A lot of people will send me their tax returns. If you're a W-2 employee, that is all I need. I just need your W-2 taxes. A lot of people are concerned that they're a W-2 employee and they haven't filed their taxes. And I said, it's okay. I'm not using your tax returns. We can verify that your W-2 matches what you gave us. So we're totally fine for W-2s. And 30 days worth of pay stubs, I always say 2 if paid monthly or semi-monthly, 4 if paid weekly.
All right. So y'all got it on the checklist very specifically, and I've updated those line items, Tanya. So next you have here signed business returns. Again, for the self-employed individual, is that your requirement?
It is.
Wonderful.
And if they're not signed, they will have to be signed at closing. They literally send them to the attorney's office to have them signed.
All right. So guess what? I'm going to make that in bold so people can lay their eyes on that information. All right. So the next item I have here is the bank statements. And I heard you preach about those bank statements. And is 90 days the amount of bank statements that you need?
No, I need 60 days.
Okay, so let's update that. Okay, so every lender is different, ladies and gentlemen. Don't be mad about the requirements. Every lender is different. But what I did hear you say that I am going to add to this note is note no NSFs
Correct.
on the bank statement.
Yes.
How about that? Okay. Next, we talked about the employment verification, Tanya, and you said it needs to be, I have 2 years written. Is that correct?
That is correct.
Yep. Wonderful. So, ladies and gentlemen, that verification of your employment history will be 2 years back. Let's talk about information and assets. I have additional stocks, bonds, 401k, retirement, IRA, other investment accounts that may be listed on the application. What can you tell us about those documents?
I would say 401k on a whole every quarter. And then the other asset statements, I would say once a quarter as well, because most mutual fund accounts come every quarter. If you get them monthly, then I need your last 2 months. But other than that, the most recent quarterly statement is fine.
Okay, so I'm going to update that. Note if it is monthly statements, you want monthly statements, and otherwise quarterly statements. All
Correct.
right, sounds good. How about the copy of your driver's license and social security card?
That's great. Driver's license is fine. People send social security cards. They really don't need to personally. There's a social security verification form if for some reason someone came from another country and they didn't get their social security card until later on. They can tell and they'll say, oh, you have to hand, wet sign and we can verify social security. So copy of driver's license is all I need.
Okay, so I've updated that accordingly. And then next, we're talking about the insurance declaration.
Well, insurance, when you start looking for a home, don't worry about the mortgagee clause and the deck page. What you want to do is get me or my processor the name and address of your insurance agent. We'll take care of the rest. So I have a lot of clients that say, hey, what's the loan number? What's the mortgagee? And I'm like, you do not have to do that.
Right.
We'll just give us the name and phone number of your homeowner's insurance agent.
Okay.
Yes.
So I will update that policy / agent information.
Correct.
Right. So that's
Yep.
better. Okay. How about a survey or a warranty deed or any of those items required?
Survey in Florida always. In Atlanta, we do not use a survey except new construction. 9 times out of 10 new construction. I haven't really seen anybody do new construction using the Alta 9 instead of an actual survey. So I would say Florida, it's required. Atlanta, new construction, yes. On a whole, no, we don't do surveys unless the buyer wants one.
Okay, perfect. And then that warranty deed, tell the buyers exactly what that is and when they get it.
Well, they get the warranty deed. You're actually going to get it after closing. So what happens is the attorney records everything. And just know this, do not, whatever state you're in, you will get it from the attorney usually 30 to 60 days after you close. But as soon as it gets recorded at the courthouse, immediately you're going to start getting letters in the mail saying, do you want a copy of your deed for $75 or $100? Remember, we talked about those attorney fees that you paid on your closing costs? That included a copy of your warranty deed. So you will get that from the county. You do not have to pay extra. Just wait patiently. You will get it. You will get that from a lot of attorneys, believe it or not, have it sent to them and then they send it to the client opposed to just letting the county send it back to them.
Yep, absolutely.
You do not pay for that.
Okay, I've updated that on our checklist. And how about it says copy of the current note? Is that something they need to be thinking about, worrying about?
No, what they should do with the copy of the current note, that would really be for refinances and really government refinances. So I would just tell everyone after you close, you want to put in a safety deposit box. You want to go ahead and put your copy of your title insurance and a copy of your warranty deed, and then also a copy of the note. You want all of those in one place. A lot of the other documents, they're just standard, but that title insurance you need and the copy of the note you would need on a refinance or just kind of down the line. Believe it or not, people don't even remember what their interest rate is.
Perfect. So next line item is talking about their earnest money.
Oh my goodness. Oh my gosh. Earnest money. People, agents, people, do not use a money order most importantly, do not use cash for your earnest money. Whenever I see a money order, I automatically know I'm in trouble because the chances of someone really literally going to the bank, taking $1,000 out and walking into a Walmart and handing them $1,000 where I have a clear audit trail just doesn't happen. So agents, be aware if a client is giving you, or everybody should really be wiring their earnest money to the attorney's office or to the title company. But if they're not, and they give you a money order, you shouldn't even really accept the money order. In the sense, you should say, hey, where did you get this money from? I know it sounds like, well, that's not my job. I don't really want to get into that. They gave me the earnest money. Yay. But the only way the client is going to be able to use that towards their funds to close is if it's verifiable, which means I have an audit trail. I can see where it came from.
Mhm.
So let's just say you did a wire. We're always going to need a copy of that transaction history showing the wire coming out, the money order coming out, or the canceled check. So a lot of times clients will send me a copy of their wire, their wire receipt. Well, that's great, but I need your bank statement to show that as well.
Yes. Oh, that's a great point. Oh, the shenanigans, right?
Yes. It gets really, really critical. I've had it where I've had to remove the earnest money from the contract. The client has to get it back afterwards. It's something that can go so out of hand so fast, and it's just, don't use a money order. Use funds that are verified. And if someone is giving you a gift, you need to let your loan officer know immediately that it's going to be a gift so it can be documented. The whole point of all of this is to make the process as easy as possible once you're under contract.
Absolutely. So I'm going to just add a couple of explanation points and bold that
Please.
point.
Yeah.
Okay. So let's go on down. The lender requires a signed copy of the purchase and sale agreement, as we agents call it, the binding agreement.
Correct.
All pages, all exhibits, all addendum, all amendments go to the lender.
And if I could just say to the agents if you've got agents listening with their clients, please put that counter offer on top and send it to us in one PDF. You'd be surprised. I get seller exhibits, seller disclosures, CADs, all of this. And the counter is at the bottom. And so I'm sending in a contract that says sales price is 500, but we've got a counter that says 580. The appraiser isn't going through all of that. And the appraiser just sees the 500. Now the appraisal comes back at 525 and everybody's like, you didn't see the counter offer. So just put the counter offer on top and just take 5 minutes and combine them all into one PDF.
So here is my teachable moment for all of the agents on the webinar today. This is your opportunity to do what is called a conforming contract for your lender and your broker, for that matter. I just finished teaching a contracts class today, ladies and gentlemen, and that was one of the teachable moments. When you have multiple counter offers back and forth and back, it makes it very, very confusing for the lenders, for the attorneys to get to the bottom line and basically the gist of the deal and what needs to be notated on that settlement statement. And so my recommendation is always have a conforming copy of your contract. What that means is you now take a brand new, fresh, blank contract and you type all of those counters back and forth as they were as the final agreement, meaning what was finally accepted, what was the final price, what terms you came to, how much the earnest money, where we're closing, the closing date. All the special stipulations are now on one fresh copy of those GAR contracts for those realtor members or for those non-realtor members of your purchase and sale agreement on whatever forms you are using. And this is still relevant to new construction, ladies and gentlemen. All right, Tanya, I've got a few more checks on this list for the people and then we're done. So let's go back to page 2. So let me scroll back down. We have now information regarding residency. This is important because I know there are some out-of-state people on the call today. So can you talk about your requirement for residency as it applies to someone getting a home loan through Madison Chase Capital Advisors?
Absolutely. So on a whole, verification of rent is not required because when I run you through automated underwriting, it will literally say verification of rent not required. Now, the only time it is required is if you were doing a manual underwrite. And so a manual underwrite just means, and you can only do this on a FHA loan, it just means that whether you had a bankruptcy, there's something that is given me ineligible, but you could technically be approved. So then it becomes a manual underwrite. And just that's the only time verification of of rent comes into play. Now, on a whole, this is the rule. If you're doing if I have to do a verification of employment, if you live at a apartment complex or you make your check payable to a property management company, they just have to fill out a form. Unfortunately, if you live with your sister, you've got a roommate and you say, I pay $500 a month for rent, or you live in a house and you pay, the owner of that house, I need 12 months canceled checks. On a whole, it's 12. Sabrina has 24. I've never really seen 12. We usually go back 12 years. So 12 months canceled checks, we will definitely need for a verification of employment for a
Verification of residency.
Yes, yes, residency. Sorry.
Yep.
See, I'm always in VOM in refinance mode. So yes, verification of VOR. Yes, excuse me.
I got your back, sis. Okay. Very important technical and legal question. My next item talks about a copy of a divorce decree, alimony or child support, etc., and documentation accordingly. Can you speak to those documents that may be required?
Absolutely. So a couple of things. Every guideline is different, but when it comes to child support and alimony, let's just talk about child support because most people get child support. A lot of people don't get alimony. So child support, it's crucial. We have to make sure that that child it will continue for 3 more years. So if the child is 16, unless a divorce decree says why they're in college, on a whole, I wouldn't be able to use it because it stops at 18. Mm-hmm. So the age of the child is very important. Believe it or not, sometimes you have to do birth certificates to show the age of the children. So don't become offended if someone says, hey, can you send me the birth certificate? Last but not least, I can only use child support. Not only does it have to be, not only do I need to show it's court ordered, I also need to show that you've received it for X amount of months. And I guess that's where we get the term deadbeat dad, because you can have someone, or mom, you can have someone required to pay, ordered to pay, but they don't pay. So you can't give me your child support order. Oh yeah, I get $1,000 a month, but he hasn't paid it. Now, another thing that people, a lot of times, you can have an amicable divorce. You can have a couple that was never married. And, I had a gentleman who paid $1,500. He was never married. He paid $1,500 every month every month, like clockwork, into the daughter of his mother, the mother of his daughter. So what we did was they had a very nice relationship. He did a handwritten letter. He got it notarized. It just says, I voluntarily pay $1,500 a month for child support. And I always say get it notarized because to me, it's just, it's that. And then we take that along with the last, just depending on guidelines, it could be the last 3 months or 6 months of payment showing that they were paid. So you don't I automatically don't say, oh, I can't use your child support if it wasn't court ordered. Because if you guys have a relationship and they're willing to write a voluntarily that they pay child support, we can use that as well.
Mm-hmm. Awesome. I'm looking at my notes and we are in the home stretch, y'all. I bet this is powerful information for people. And trust me, no one ever taught you this before this moment. It wasn't in high school lecture. It was not in college prep. It was not in your lecture in college. at all. These are teachable moments for adults who actually want to become homeowners, and they've got to be connected to the resources and the people that have the information. And it's all about speaking truth to power. Not every lender is created equal, and not every agent is created equal. So I know Tanya can speak to that point as well. Okay. Okay. So next section here says anything regarding retirement, because I've gotten questions from those that were on the Roland Martin Unfiltered, Tanya, about having retirement income, fixed income. Speak to that, please.
Absolutely. So fixed income, Social Security and pension. So just know that if you're receiving Social Security, if you're receiving a pension, I'm going to need a Social Security award letter, and then I'm going to need a pension award letter. And most people who receive a pension to say, what? It's and if you are receiving a pension, they have this letter on that ready to send to you. It just says Sabrina Lowery receives $4,200 a month. It's a lifetime benefit. End of story. That's all I need. I need that. And then I need your Social Security award letter. Go ahead and hang on to your 1099s that you receive at the end of the year. So that's for Social Security. That's for pension. And then you have disability. If you're receiving SSI for your child, then I would also need that award letter for them. And then as far as retirement for your 401k, after you're 59 and a half, if you start taking funds out, we can get into that on a whole. I can use that. There are a few caveats, like you had to do it the year before, or a lot of times people will just do one lump for the year. So they might want to do, I'm going to make this up, $600 a month. So they just do $7,200 out annually. So we just need to show that you have a history of getting that money, or if that's the first year that you've taken it out, then that's the year that we'll use. But on a whole retirement 401k, we have to document how much you take out annually. And here's the tricky thing: workman's comp and disability income is very hard to use for a mortgage. And the reason that it is because they're not going to guarantee it. Because if they guarantee it, then that's a lawsuit for them. So I'm going to say that's a case by case basis, but just know that if you're on workers' comp or you're receiving, even if it's long-term disability, the chances of me being able to use it as income is very slim, because they're not going to guarantee it. And that's just something that we should just put out there now. I'm a straight shooter and I don't like giving bad news, but workman's comp and long-term disability on a whole is very hard to use to verify income.
That's an awesome talking point, Tanya. Thank you so much. I'm sure many of our attendees had that question. So next, you see the next two lines talk about this wonderful word called bankruptcy.
Okay, now I'm going to talk about bankruptcy. And I'm going to start with, if you are thinking about filing bankruptcy, okay, think long and hard about which one you're going to do. Are you going to do a 7 where it's wiped out completely? Or are you going to do a 13 where you pay it back? Now, a bankruptcy here's the thing. If you say, you know what, I'm going to do a 13, which means you pay it back, they work out what your credit is. And let's just say you have to do $1,100 a month. And 5 months in, you say, you know what, this isn't working, but you don't even want to do a 7. You're like, I'm done. That's still a bankruptcy. That still counts against you for 2 years, because the question on the loan application doesn't say, have you had a bankruptcy dismissed? It says, have you filed bankruptcy in the last 7 years? If you file, you file. So I've had people crushed because they dismissed it. They were doing a 7 and the attorney didn't get the paperwork in, and they said, you know what, forget it. Well, guess what? It still counts as a bankruptcy. And now I've got to go from two years from that dismissed date. Same thing for a discharge. So with a Chapter 7, it's 2 years from the discharge date. So I'm always going to say, what was the discharge date? Because that's the date I have to go by. And it's 2 years from that date. So let's just say you filed for bankruptcy September of 2019. A lot of people get really excited. They're like, oh, it's September 2021. It's been 2 years. No, you have to wait until October to apply. You have to be out of that bankruptcy for a complete 2 years. So that's one of the things people want. They're like, oh, I'm ready. And it's like, no, you're not. So my biggest tips on bankruptcy is think long and hard before you do it, because once you file it and it's filed at the court, it counts as a bankruptcy, and you will have to wait 2 years from the dismissal date. And other than that, we go by 2 years from the bankruptcy date. A lot of people say with a Chapter 13 guidelines say you don't have to wait 2 years. You can do it right after, but on a whole, it's going to be virtually impossible to get approved after you paid off your 13. Usually lenders want to see 1 year. Now, the flip side is you can be in a bankruptcy, a 13, and purchase a home. But if you're in a 13 and you purchase a home, you have to get permission from a trustee. So as soon as somebody calls me and they start talking about, oh, we're in a bankruptcy, but we really want to buy a house, the first thing I say is talk to the trustee. I'm not pulling your credit. I'm not saying if you can or you can't, because if you can't get permission of the trustee, it doesn't matter. You will not be able to purchase a home. So if you're in a 13 and you want to purchase while you're still in the 13, get permission from the trustee. If it's dismissed, you have to wait 2 years, or if it's a discharge, you have to wait 2 years from the discharge date.
Awesome. We are at the very last and
Absolutely
probably one of the most important topics when it comes to funding and financing, because it entails its own contingency. And this is specific to our veterans, y'all. All of you veterans, first of all, we want to thank you for your service. We want to acknowledge you, but you are also rewarded by the VA with your GI Bill for home loans. And I said loans, plural. Tanya, tell the people what they need to know about the VA loan.
Absolutely. Well, I will piggyback right with you, Sabrina, and say thank you so much for our veterans for all your sacrifice, leaving the family, going to hot places. We complain on vacation in the beach at the sun. So we just want to say thank you, thank you, thank you. So when you are separated from the VA, you're going to get a copy of your DD-214. That DD-214, if you don't have your certificate of eligibility, you can send me the DD-214 and I can go into VA and see if it's available for me to instantly download it. If I can't, then I'll tell you, call this number. But the DD-214 is important because it's going to tell me how long you've been in the service, what branch of the military did you serve, etc. It's all, and then once we get the certificate of eligibility, what that's going to show me is if you're exempt from the funding fee. So with VA, there's a funding fee. All the numbers just all recently went up. So now if you use it the first time, it's 2.3%. Subsequent use, which means you use it a second time, but you didn't put 100% down. You didn't put any money down. Then you will have to put. I'm sorry, something just came on my phone. Then you will have to. If you don't put anything down, they feel like, listen, we gave you your first house for nothing. Now you're buying your second house. So your funding fee is now 3.3%, but it's financed into the loan. But if you are a disabled veteran, then you're exempt from the funding fee. And that's whether you refinance, if this is your second home, third home, eighth home, it doesn't matter. You are exempt from the funding fee. So one thing about VA loans that you have to be very careful about is that a VA loan has their own guidelines. VA loans, you have to have reciprocal income. You have to have, you can't, normally, and I don't want to get too into the verbiage of loans, but on a whole, I run a loan through automated underwriting and I could be at a 52% and I get an approved eligible. FHA, that's all I need. VA says, you have that, but do you have residual income? That's the word. I'm so sorry. Residual income. Anyway, residual income. And what VA is saying is that they have a whole formula. What part of the country you live in, how big your house is, how many children are in your house. And then they do their calculations. So at the end, and I haven't looked this up, but I'm going to give you an example. For a family of four, the residual, sorry, I don't know why I keep saying residual as in coming back. The residual income it's probably $800 a month. And what does that mean? That means after they take out your child care, you pay your taxes, your utilities, etc. Do you have $800 left over to live? So it's going to be based on how many children in your family, size of the home, etc. So when you're doing a VA loan, it's that child care dependent letter is huge. We don't count child care. You could have, you could be paying $2,000 a month, you know what I mean, for childcare. And on a regular loan, it wouldn't matter. VA, it matters. They're going to take that into your debt to income ratio. So VA, believe it or not, they love their veterans and they want to do everything they can to get you in a home. But VA does not like collections. VA loans, you could have a low debt to income ratio, but if you have a lot of collections, that's when you get into that refer, and we might have to do a manual underwrite. I know if I've got veterans listening, that that your commanding officer will come and say, hey, we got a call, you owe so-and-so. Mm-hmm. VA does not play when it comes to collections. So they definitely, you can do a VA loan down to 560, 100%. We can do a manual underwrite. You will have to have rental history, but it is there. But I just think that one thing, when you're thinking about credit scores, you don't want to be how low can you go, because it's also gonna bring a lot of disappointment. Just do your best to prepare to put you in the best position possible. For a veteran, if you had a 620 score today, your rate would be 2.5% with a 620 VA loan, 2.5%. with no mortgage insurance. So I love VA loans, obviously, with the exception of reciprocal and residual. I know VA loans, but it's a great, great product for a family, for a veteran. And just so you know, the only people that can be on a VA loan is another veteran or their spouse. End of story. That's it. Can't be your sister, grandmother, my mom, my dad, spouse, or another veteran. Right now, I have a daughter and mother buying right now. And I just learned that after this loan is underwritten, it has to go down to VA for final approval.
Mm-hmm.
I learned that one the hard way. Yep.
That's awesome information.
Yes.
Y'all, this stuff is priceless. I don't know about you, but there should have been a cost for admission to this information, but we don't do it for the money, y'all. We do it.
We do not.
So
absolutely.
There, our final talking points, Tanya, as everybody can see on the screen, is a statement of service if it is someone that is in active duty. And listen, anybody that is going the route of a VA loan, I want to make sure that you hire a realtor. Okay. Yeah. I have represented many of our military servicemen and women, and they appreciate having representation. It's just like going to court before the judge. You do not show up for a DUI case without an attorney. Therefore, let's not show up with out representation when it comes to buying a home with our VA loans or any other loans for that matter.
Amen, sister.
All righty. So we last have here our verification of employment, our verification of residence, like we talked about, that non-Georgia residency. Can you please, one more time, beat that horse for the people? What does your lending institution speak to those that are not living in Georgia or have residency in Georgia, but they want to buy property in Georgia?
Well, the only way that they could do it, if it was an investment property, let's say they wanted to do a second home and they were thinking a second home is 10% down. That just means I live in New York, but I'm thinking about retiring in Atlanta. This is where my children are. So I want to buy a second home. So that's, you can only do a conventional loan. FHA is only for owner occupied. VA is only for owner occupied when you a purchase. So for, second home, and then you have investment property, and investment property is 20% down. You can do it with 15%. Believe it or not, I don't like doing 15% down because you have to have mortgage insurance. And believe it or not, when you have a primary residence, and you have mortgage insurance, it will go away after you reach an equity position of 80%. But with investment property, the mortgage insurance never goes away because they feel like it's always going to be a risk. So I don't really, people do it, but I just say 20% down for investment properties. I do have some stated investment properties. So, if you're an investor and you're like, I'm self-employed, can I do stated? They do allow stated only for investment properties, and the house just has to rent let's just say the mortgage is 2,000, then the rent has to be able to get 3,000. So there's a little formula for stated investment property. But one thing that I just really want to tell people is that you really have to be careful with occupancy. Don't let people mislead you and say, you can do this. I always laugh at, Real Housewives of New Jersey. They went to jail for that 1003, that application for some of those loans for mortgages that they got. So you have to be very careful. You are signing a document that says within 60 days, you will live in this home. End of story, within 60 days. So, there's so much out there. Everyone's trying to give you a life hack, do a two family FHA, live in it for a year. All of that is fine and good, but do your due diligence, know what you're doing. You do not want to get in trouble. Believe it or not, Fannie and Freddie had people going out, knocking on doors, seeing who opens that door. So you have to be very, very careful. There are people out there that they check, just like now with college students, you can tell if the, you forged a paper. Well, now they can put the address in a database and see if it's coming up as a rental listing, an Airbnb or a rental listing somewhere else. So I'm not ending on a negative note. I just want people to just be well informed, and just know that if you just take your time, if you're diligent, it will come to fruition. But if you've got blemishes on your credit and stuff that you have to fix, just do it. Just take your time. God is faithful, but you have to do your part. You have to do your part. So I believe in building generational wealth through real estate, but I also believe in purchasing a home that you can afford. You still want to go on vacation. You still want to take your kids away. You don't want to be in this Mac Daddy 3-car garage house with empty furniture for 10 years just to say I bought a house.
That's called being house poor.
Yes.
That's being house poor, ladies and gentlemen. And we are not co-signers on any of those shenanigans, as I like to call them. So, Tanya, I just want to make sure everyone has learned a thing, a 2, a 3, or 4, that we have provided them all of the financial resources and information that they need to prepare themselves for this process. And ladies and gentlemen, you will be receiving a copy as a digital download of this checklist, courtesy of Miss Tanya Blanchard and myself. So you'll all just stand by, drop your emails in the chat. Just go ahead, do it now, do it now. And if you prefer to email directly, let me go back to Tanya's slide. And so, Tanya, if you would please just give the people a final talking point, a thought, or whatever you would like to share with them, and be sure to tell them how to connect with you.
Well, I would just like to tell everyone listening that it is your duty to leave an inheritance for your children's children's children. And real estate is your quickest investment, and it gives a child a different form of security when they're in their own home. That is why my company, Madison Chase Capital Advisors, we believe in building wealth through generation. Madison is my daughter and Chase is my son. So I do believe in generational wealth and really taking care of people and getting you in your home and keeping you in your home.
Awesome. Ladies and gentlemen, Miss Tanya Blanchard.
Thank you, Sabrina. It was
Thank
a pleasure.
you.
Thank you, everyone.
Thank you
able to leave a legacy for your family. So, ladies and gentlemen, I just want to thank you. Thank you so much for being here today. I also want to thank everyone that has participated virtually. Make sure, ladies and gentlemen, that you are getting in touch with us. Because here's one thing I know to be true. People are afraid to ask for help. And if you don't speak up and let us know how we can help you and your family, that will delay your home ownership. That's all. So we're here to help, and we want to thank you so much for your time. Tanya, thank you, darling.
Thank you, Sabrina. Love you, honey. Take care. God bless.
All right, y'all. That was super fantastic. I am so glad Tanya spent this time with us today, and we appreciate all of the nuggets, all of the gems, and that thorough home buyer's checklist for the lender. So here's the thing, ladies and gentlemen, once you get through that process, that's when we are ready for your closing, that purchase and sale transaction. So you got to think, when you go from contract to closing, by the time you find your house with me, your realtor, and you get to the closing table, that process may take you anywhere from 2, 3, 4, 5, 6 weeks sometimes. It depends on you. So, ladies and gentlemen, the reason we shared that thorough checklist is because some of you guys are not organized with your paperwork, with your documentation. And these are things you're going to have when it comes to purchasing real estate. So I don't want anyone to fail along this journey. I want everyone to get their home buyer toolkit organized. I want you to start thinking about all of these different levels that you have to be ready for the pathway to home ownership. So, ladies and gentlemen, thank you so much. If you have questions, I want you to absolutely continue to put them in the comments along this thread. We will be checking them regularly. If you need a free consultation with me as your housing counselor, I can be reached at sabrinalowery.com, and you simply book a 30-minute free consultation. This may be a phone call. It may be a virtual Zoom meeting. We can even meet in person at my office. I am located in Atlanta, Georgia. And ladies and gentlemen, I don't mind helping you. You just got to ask for the appointment, ask for the meeting, ask for the call, and let's just see if our synergies are alike, if we are in alignment with each other, so that I may be your guide along this journey to home ownership. I don't want anyone to feel like, oh, my budget is so small, or my budget is too big to work with the likes of my team at Legacy Realty and Management, or not. Choose a realtor that you know, like, and trust. Get those free resources. HUD.gov is a great place. We had some questions in the chat about how much is the FHA loan limit currently. And ladies and gentlemen, that amount changes. So I like to direct people to the resource. Who is the publisher and the determination, and has the determination of that higher loan limit? We're currently around the mid 300s, 356,000 to be exact in most areas. But in California, for example, it could be over 800,000 for an FHA loan. So you got to do your due diligence and your research. You got to talk to the lender, that banker, mortgage broker, whoever your financial advisor is. That financial counselor will tell you and your family what is the best way to fund your real estate goal. Is it, I have a Roth IRA that I can pull my money out of and draw from to pay this mortgage and put the property as an asset in the name of the IRA. Did y'all even know you could do that? Did you know that as an estate, if a property goes into probate, an estate can purchase a property? Did you know that? Did you know that in most states, including Georgia, we are a probate state, which means if God forbid any of your friends, family, colleagues, relatives, neighbors pass away and they do not have a will, their property will go to the county probate process. And that can sometimes take years to notify all of the next of kin that there is real estate, an asset that's sitting there unclaimed because the person did not see fit to get a will. I have a problem with that. Those that know better do better. And those that have a home should absolutely have a will. The last thing in your legacy that you want to have happen is for that real estate asset to go to probate because you were not proactive in being a responsible owner. Okay, so I just wanted to drop a few nuggets and points and things that as a housing counselor, this is information you want to have. You know, some people inherit real estate and then they want to turn around and sell it. Well, guess what? Hire a realtor like myself who can guide you through the process of selling real estate. As a matter of fact, I've got another free digital download for you, The Home Seller, on my website. All you got to do is go to sabrinalowery.com/shop, and there is a free 50+ page digital download, the ultimate guidebook for home sellers. If you never sold a property, how do you just know what to do? And then for sale by owner, how dare you compete with the likes of a trained professional in real estate? I challenge you to sell your house on your own without a realtor. In this market, you never know, but do you know the contract language? Do you know the special stipulations to put in the contract? Do you know who to name as the holder of the earnest money? Because you know, sometimes buyers don't want the seller holding their earnest money. And Tanya just talked about it in the previous segment that you don't want cash payments of earnest money, and you probably want the closing attorney holding that earnest money. Great, wonderful, points made, nuggets dropped. I am good. So, ladies and gentlemen, one more time, get your free Legacy Toolkit digital download. That is available on the sabrinalowery.com shop. It has information all about the process, your insurance, what kind of homeowner's insurance do you need to be thinking about? What tax consequences do I need to be thinking about? What property taxes am I going to write off? What about your tax planning? What about when you move in, some interior decorating and design, a little home staging, if you will, for those investors that want to Airbnb their properties or rent out a furnished apartment? Listen, I've got all the resources. I've got a phenomenal team across the industry to help you at any avenue of real estate. And it would be my honor, my pleasure to work with you. Connect with me at sabrinalowery.com. And for all of your real estate property searching, go to legacyrealtyandmanagement.com. There are tons of listings out there, but you definitely want to work with a realtor when you are submitting that contract so we can get you successfully through the ultimate home buyer experience. Ladies and gentlemen, my name is Sabrina Lowery. I am the qualifying broker and owner of Legacy Realty and Management. It has been my pleasure to speak with you and teach you a little bit about the process of home ownership. Get those digital downloads and book your consultation today. I look forward to connecting with you soon. Make it a great day, everyone. Thank you for tuning in. Bye-bye.